The topic is recent EU tax problems, but of course you will see that almost immediately as I start, that when we are talking about recent, it may very well be very old. And many of you, I'm sure, especially those working in higher courts, are familiar with this sense that dealing with new things is most of the times dealing with old problems that only at a later stage come in front of the judges. So this is one preliminary point. A second preliminary point, I know that I will be talking about obstacles only very briefly because I'm sure that you will cover this very extensively tomorrow.
Yeah.
So this would be just to have something in our minds while I go on with my presentation. I'm perfectly aware that right now I am the obstacle between you and the lunch, so I will try to keep it
Take your time.
simple.
We have plenty of time.
Okay.
Take your time.
I have permission, so
Yeah.
yeah. And the purpose of this presentation is to present some cases, through which we will be able to see what a problematic rule looks like and what happens with it. So, the outline, a brief, as I said, description of obstacles and how to get rid of them, the Greek experience. So we will use the Greek cases to show this type of problematic rules that have been tackled and what happened afterwards. An interesting point that I found in the Sport case about discrimination and restriction and the role of the National Court in determining whether there is a restriction or not. Another case of discrimination, coming back to Greece now, a case that has not been a case yet, not before the court. So it's a case, it's a piece of legislation that creates problems. Moving back outside Greece, a point that I would like to make using the Italcar case, the Portuguese case on thin capitalization rules, yes, where there was a reference on legal certainty and how this is related to the proportionality test. This is also a task for the court, and I found a very interesting discussion in this case that I would like to share with you. And last but not least, I will move to another subject, the nebis in idem principle. It is a topic that it is interesting as it is in itself. It's also even more interesting in Greece right now because we do have a decision from the Grand Chamber of the Supreme Administrative Court in Greece stating that this is something acceptable. And we have a case law from the European Court of Human Rights and from the European Court of Justice saying the opposite.
Katerina, just for the benefit of the people in the room that don't know what nebis in idem means,
I will explain.
Could you just say what it means?
In one phrase, we are talking about the cumulative application of administrative and criminal sanctions in cases where the administrative sanction amounts to a criminal one. That would be punishment for the same reason, for the same set of facts, by two separate jurisdictions, administrative and criminal, in the cases where the administrative sanction amounts to criminal.
Okay, can I just ask the audience, have any of you come across this concept today, up to now? Lovely! Lovely!
And actually, we are at the two opposite sides of the spectrum.
Oh, lovely! We are going to have a seriously good, interesting debate.
Maybe
Perhaps you should start with this topic.
Okay.
I think we should start with this topic. Lunch is moving on.
Okay, I can start with this topic.
Start with this topic.
The thing is that I had this in mind as an additional point that it is interesting, but I didn't know what would be the.
I had no idea
sorry.
nebis in idem was such a hot topic. I have a Swedish student who writes about it regularly. It seems to occur in Sweden. Is there anybody from Sweden here?
No.
Yeah, it seems to occur
okay.
in Sweden a lot. Yeah.
Okay.
We have a new legislation from the 1st of January.
Dealing with it. Oh, okay, because the cases have been coming from there.
Yeah.
Yes.
Yep. So the reference is from a case that the Court of Justice had to decide a couple of years ago. So it's the decision in the case Frandsen or Acker Frandsen. You see the citation there. It was delivered in February 2013. This decision concerned the cumulative imposition of VAT penalties, no, administrative penalties for filing tax returns of VAT that contained false information. This false information in the VAT tax returns had the result that the taxpayer had not paid VAT and income tax to large amounts that draw the application of severe penalties. That was one side. The second side was that the same behavior of the taxpayer also resulted in his being criminally pursued, because this was also a criminal sanction under the domestic legislation in Sweden. And the question was whether this cumulative application of both the administrative penalties for VAT tax, VAT fraud returns, false returns, and the criminal sanctions are compatible with the Charter on Fundamental Rights of the European Union. Now, this is one point that I isolated from the case, because the case also discusses the application of the European Convention on Human Rights and the corresponding principle of nebis in idem that we find also in this instrument. I have only isolated the European Union legislation, not the rest European legislation. So, the question was whether Article 50 in particular, providing that citizens of the European Union have the right not to be tried or punished twice in criminal proceedings for the same criminal offense, would apply in this particular case. And the court said yes. Yes, it should. So, this is a quoting the decision. The nebis in idem principle, therefore, which we find in Article 50 of the Charter, first, does not preclude the member state from imposing successively for the same case administrative and criminal penalties. It does preclude only in the case where the administrative penalty is found to be equivalent to a criminal sanction. Because in that case, we would have two criminal sanctions, and therefore we would not respect the nebis in idem principle. Now, when the administrative penalty amounts to a criminal sanction, is something that the court has to establish using criteria that have been set previously in the case law of the European Court of Human Rights in Strasbourg.
Well,
Actually, that is from the horse's mouth, because Skouris has presented the case a couple of years back in Athens. Actually, this was a compromise to allow member states to interpret the meaning of criminal in their own way and to decide whether they had an internal constitutional problem or a European Convention problem.
Mm-hmm.
And that's and the reason this kind of compromise solution was reached, although President Skouris did not go into that detail and he mentioned only the European Convention, is that there are member states, such as, for example, Ireland, where administrative sanctions are simply not permitted. As far as the Charter, the European Charter goes, administrative is administrative and criminal is criminal. Criminal is the stricto sensu criminal. There's no real angel criteria in the Charter, except insofar as due process rights are involved. But member states are allowed then to use a different definition of criminal, which is not the case on Maloney, which was decided on the same day, and that's something that President Skouris has been very clear about. You have to read those two cases together, because
Right.
in one case, in Maloney, we said no, everything is covered by European law, and the criteria will be found in European law. In Acker, Frandsen, we said, well, you have a leeway to see whether you have other constitutional
Domestic law.
principles that might lead you to a different, might make you apply things a bit different.
And you said that your colleague sitting behind you had the opposite view.
Not on that. I think that
Okay.
we have the opposite view on whether they are either or not, but
Okay.
not on that, because that's not something that we have an opinion about.
Okay.
That came straight from the horse's mouth.
And I'd be very curious to learn what Sweden is doing to fix the problem. How did Sweden react to these judgments?
So we try to cooperate the two systems. We have different courts that deals with tax matters and with criminal matters. So we try to in the cases where it comes up both in the criminal matter and in the tax matter, it will in the future be dealt with in the criminal process.
Is there anybody else who would like to contribute on this topic? Because it's a fascinating topic that I saw lots of hands. Professor Mewson. Yeah, you can give me a mic, yeah. We'll pass the mic up in a second.
Well, from a Dutch experience, and I think many states have that, we have two types of administrative sanctions. Like minor offenses, like not filing your tax return in time, where you have small penalties of perhaps 500 euros or 1,000 euros. And you have really high administrative penalties. Unreported foreign bank accounts that are disclosed by the tax administration that are fined with a penalty of 300%. So the tax is increased by 300%. So I think it's obvious that the high administrative penalties are of a criminal nature and fall under the nebis in idem doctrine, and not the small, tiny administrative penalties for, like order penalties for not complying with certain formal rules. And then you have to have a mechanism where you upfront decide either you go for criminal prosecution or you go for administrative penalties, but you can't do both.
So a Belgian response.
After the Zolotokin case against Russia from the Court for Human Rights, we had to change our own legislation in Belgium, and they opted for the una via principle. There is a meeting now between the prosecutor's office and the tax administration, and they have to take a decision. If the prosecutor's office decides to go on with its investigations, the tax administration has just the right to levy the taxes and no penalties, no administrative penalties, nothing.
Right.
Because in Belgium, every administrative penalty is a criminal penalty.
Right.
And if the prosecutor's office says it's not something for us, the tax administrations go on and they can impose penalties.
Okay. Anybody else? Okay. Where are you from?
I am from France.
France.
And
Okay.
we have in France this jurisprudence too from our Supreme Court, administrative Supreme Court, our Council of State. But 2 years ago we had a case which divided the judges who worked in the tribunal I am. It was about a criminal penalty regarding taxation. An enterprise was controlled by the customs administration, and the customs administration decided to apply a criminal penalty. Then they discussed with the enterprise, and they decided to make a transaction. The penalty was 5,000 euros, and they made a contract between the enterprise and the administration to say that they will have to pay only 300 euros. And so they paid it. And years after, the French tax administration decided to control again this enterprise, and they decided to apply the same criminal penalty for 5,000 euros. And the question we had to deal with was whether the first transaction was an appliance of a criminal penalty, or if the administration was allowed it to apply this criminal penalty. I mean, the principle ne bis in idem, we didn't know if we had to apply it or not. And we were very divided in the tribunal, and we decided to apply the principle and to say that a transaction is the same that applying a penalty. But of course, it was very good for the enterprise, because they only paid 300 euros, whether the...
But I'd be curious to know what legal base you used. What legal base? Where did you get the legal power to use the principle? So you used the European courts. So you used the European court judgments.
Yes.
Okay.
Sort of.
But do you see it as a general principle of French law, a general principle of EU law?
We were in the first instance tribunal, and we didn't decide to write it in that way.
Okay.
But the case went to appeal, and the Court of Appeal will have to decide if we were right or not.
Okay.
I think this is an illustration of this principle and the transaction between an enterprise and the administration, and it can occur more often now.
And it appears to have generated a lot of interest across the EU. This litigation, this type of litigation, is becoming more prevalent across the EU from the hands that went up in the audience and the interest. You want to make another comment?
Yes, just a small comment. What I think is actually the issue that we will have to decide. I don't think that we will have to decide whether the Engel principles apply, whether the principle non bis in idem covers also administrative sanctions. I think that literally we will have to decide on the question of idem, namely whether a sanction against a person, because the criminal sanction will go against the person who made the false statement, is idem with a sanction that is imposed against to an undertaking.
Yes.
If the undertaking was a corporation, it would be clear that it is not idem. Does this change simply because it's a personal business?
Yes.
You might argue that if it's a very small business, and you might argue that the European VAT rules, for example, giving an exemption to very small businesses, even from regulations, you might argue that their person and undertaking cannot be distinguished. But above that level, you might argue that it doesn't matter whether it's a person or a corporation. The undertaking is one thing, the person is the other thing. Therefore, you don't have an identity of persons.
I think it's such an interesting topic that perhaps we should come back to it in the next training session with Teresa, and maybe include it in a workshop environment where we can discuss this issue in more detail. The other very interesting topic that Katerina was going to talk about before lunch is legal certainty and the stuff on legal certainty. I'm not sure whether you're coming across this or not, but
I would like to make one more point.
okay, yes, sorry, I was going to, yeah. Just that the legal certainty principle is becoming more prevalent in the tax cases of the court. So you'll need to hear what Katerina has to say about that as well. So, floor is back to you, sorry. We're sharing microphones.
Yes.
How are we doing at the microphone level? Is it okay? Perfect, lovely.
The second point, interesting point in this decision, and now just let me note that there are at this moment 2 pending cases coming from Italy, I think both, where they have been criminally charged, the taxpayer, and also faced administrative penalties. So they are again in front of the European Court.
Well, I think we have an Italian team in the room. Is there an Italian team? I know we have an Italian team here. Buongiorno.
There are two cases pending right now. I have the references in my blog later. So the second point.
Oh, no, we must give him a chance. You just
Okay.
said it. Are you guys involved with these cases, or is it not of interest?
No.
Not of interest at the moment?
No.
Okay, so we move on. Let's discuss legal certainty and...
No.
Oh, okay. So
My
you've got something-
point.
Okay, one more point.
Because it relates
Okay.
with a comment from the floor earlier.
Yes.
What will a lower judge do? And we have now this case in Greece where you have the Supreme Administrative Court delivered a judgment saying that the nebis in idem principle is not relevant, where you have applied successively penalties for customs code breaches and criminal also. And what happens if a new case arises before a lower court? Is the lower court obliged to follow the decision of the Greek Supreme Administrative Court? Are they allowed to deviate? What I found interesting in the Acker Frandsen case is that EU law, EU law precludes a judicial practice which makes the obligation for a national court to disapply any provision contrary to a fundamental right guaranteed by the Charter, conditional upon that infringement being clear from the text of the Charter or the case law relating to it, since this practice withholds from the national court the power to assess fully whether that provision is compatible with the Charter or not. This is an interesting point that
Yeah.
maybe will allow us to take the discussion we had earlier a bit further.
Can I ask a question? It's a cheeky question. How many of you have read this charter? Do you know what we're talking about? Have you read the Charter of Fundamental Rights? Not all of it.
Parts of it.
What they need to know
Not
basis.
all of it.
No, they need to know basis.
Could you just do a quick show of hands? You've read it?
Not all of it.
Not all of it.
The articles that
The articles are relevant to the case.
It takes
Okay.
about 30 minutes to read all of
All of
it. It takes a little bit more to read the guidance. So can I suggest that you do read it? I'll explain the reason why. First of all, it's a growing area of litigation that you have to become familiar with. Secondly, if you go to the court's website, there's a relationship between the European Court and the European Court of Human Rights. And there are two discussion documents on the court's website that you need to read as judges, because those documents discuss what happens in a situation where the issue involves both courts. Which court will win? Which court will be the top court? And how the two courts are going to manage those issues. Now, you must be having burning questions about this following the nebis in idem discussion that we just had, because it involves two sets of two different courts, two different areas of law, and there's an intersection between EU law and the European Court of Human Rights law. And then, of course, I should ask the question, how many of you have regularly looked at the European Court of Human Rights website to read the cases? And you see, that's an interesting area that you need to read as well from time to time. And again, have one judge at the national level completely familiar with the cases that are really relevant each year. And then, of course, I should mention also the EFTA court. And, of course, very few people probably have looked at the EFTA court judgments. But the EFTA court is delivering important judgments in the area of direct tax in the EU. So you need to check their website as well from time to time to see have they dealt with the issue. Katerina.
We will move to the legal certainty.
Yes.
Okay, so, oops. Now, the Italcar case, maybe we need to present a little bit of the facts of what this case was about. So we have a Portuguese case. It's a Portuguese taxpayer. His business is hiring out light motor vehicles. what about this company? It's Car Portugal. Its capital was held by a company in Belgium, 100%. 10% of which was held by another company resident in the United States, so a third country. The US company made a loan to the Portuguese company. US, Portugal. I remind, US is the parent, 10% of the Belgian, who holds the 100% of the Portuguese company. The US company itself had a 0.02% interest in the Portuguese company itself. This triggered the application of the Portuguese thin capitalization rules and restriction on the deduction allowed to the Portuguese company in relation to the interest that it paid for this loan to the US company. So this was the problem here. The question, the discussion in the case developed around the thin cap rules that applied, according to the domestic legislation, only to special relations, when special relations were in place. And the question was, of course, what are special relations? I will not go into the discussion of which freedom was applied. The question was whether these special relations was equal to control. Normally, in cases of thin capitalization rules, we would see the restrictions that apply when there is control of one company on the other, because it is in those cases that there is the risk of manipulation of the amount of interest paid. If there is no such control and there is no risk, because it is a case of normal markets rules that apply, then we don't have the same problem. So the question again, is special relations equal to control that is normally required in such cases? The Portuguese company argued that this was the intention, this was what was meant by the legislation in question. And not here, sorry. This is it. The court said that reading the Portuguese legislation rules, it is not clear from the outset what is the scope of application, where these rules apply, in which cases they apply. This, according to the court, was a case where legal certainty was not guaranteed. Since legal certainty was not guaranteed, this fact made the rule disproportionate, and we need to pass the proportionality test in order for a national measure to be saved when it is contrary to the fundamental freedoms. So in this case, when the court found that the national legislation does not meet the requirements of legal certainty, the rule was immediately found disproportionate and therefore not allowed, therefore not compatible with the fundamental freedoms. In this case, the free movement of capital.
Yes.
I don't want to go over my thoughts. I would like to hear
Yes.
maybe your thoughts on legal certainty and how this relates to
Can I ask, are you coming across the concept of legal certainty in your work? Have any of you come across it? It's an increasing area of general principles of EU law that are trickling into the court's case law. Perhaps you'd comment.
Well,
Professor Mewson has a comment on this because I gave a talk on this topic about 2 years ago in London, and I know Professor Mewson was there that day as well.
well, I think that the issue here is, I think that the thin cap rule here is a kind of anti-abuse provision.
Yes.
It's a specialized anti-abuse provision. And what you see, what many legislators do is draft anti-abuse provisions in vague wordings in order to be sure that a lot of issues are covered. But that, of course, well, it's contrary to legal certainty. And I think that you can also see that from the Cadbury-Schweppes judgment, that
Yes.
the court is inclined to say that if you make special anti-abuse provisions, you have to draft them very secure, being able only to cover special abusive situations and not draft them too broad, but then you cover situations that might not be abusive, and you will violate, the principle of legal certainty.
Yeah. Is the Portuguese team? I know there's a Portuguese team here. A Portuguese team here. Did you guys come across this case in the national court? No. Okay. It was argued by a former student of mine, and he was asked a lot of questions by the judges, and he used the same material and answers that I'll be covering tomorrow in arguing the case and responding to the judges of the European Court. When it went back to the Portuguese National Court, the Portuguese National Court just held for the taxpayer and applied the judgment. What's going on in these tin cap cases, and in the previous case before Italcar involving the UK, is the thin cap group litigation case. I'm not sure if Timothy mentioned it this morning. He mentioned FII, but we've had a number of these cases involving billions of pounds. Thin cap capitalisation rules. The taxpayer won in the European Court. The taxpayer won in the English High Court, and the taxpayer lost in the English Court of Appeal by a 2-to-1 majority in favour of the government. But I can assure you that having seen the Italcar judgment and the later SEAT judgment, that the application of EU law by the Court of Appeal, majority judges, reflected the fact that I think that the majority judges read a few cases on European law the morning or the week before they give the judgment, and came up with their own understanding of what the court is saying in these cases. Whereas the dissenting judgment by Lady Justice Arden and the High Court judgment by Lancelot, what's his last name again, Timothy? Henderson, Mr. Justice Henderson, they're far better judgments, and I think they reflected the correct understanding of these cases. I don't have my slides on these, but the later cases after the thin cap judgment are showing that what the court was saying in the thin cap judgment, it's now saying in Italcar and in the later cases of SEAT and in recent cases after that as well. So the court is not changing direction. The court is very uniform in the way it's dealing with this area. And I wrote a paper in 2012 in response to the thin cap Court of Appeal case in the UK, and it's available to you if you want to have a look at it. And I would encourage you to have a look at it, just as judges, to see that 2 senior judges in the UK went one direction, 2 senior judges went the other direction, and they couldn't get the matter appealed to the UK Supreme Court, and they couldn't get the matter back to Europe. They couldn't get the matter referred another time to Europe. It's quite interesting.
Who were the majority?
The majority were for the government.
For the government.
Oh, 2 judges in the Court of Appeal.
I'm sure they have a name.
They do have names, and I did put them in my article, but unfortunately I didn't agree with them. So their names is probably Stanley Bunton and somebody that agreed with him. I'm completely disrespectful to my own judges by not recalling their names here for you. But trust me, if I get access to the internet, I will find out before tomorrow. Before tomorrow. Yes.
If you are just outside EU law that you want the same, I recommend you the Surkov against Ukraine case of the European Court for Human Rights.
Yes.
It was a case with two conflicting legislations within Ukraine, and the court has sentenced Ukraine just for a break of legal certainty.
Just for the benefit of the podcast, what's the name of the case?
It's the case Surkov against Ukraine
Okay.
from 7 July 2011.
2000.
A lot of lawyers in Belgium are using it when we are outside of the EU law,
Okay.
because it's the same as you mentioned.
Okay. I wrote an excellent article on a case called SIAT, SIAT.
I have the reference.
Oh, you got the reference?
Yes.
Okay, and it was the first time that I really noticed the significance of legal certainty sort of sneaking into the court's case law in the tax area. I'm sure it covered it before, but it became very significant because it said that you can't have a justification for your restrictive tax rules if you don't meet the principle of legal certainty as well. So that's basically the significance of it, and I would just refer you to the cases. So are you finished? Can we go to lunch?
Yes.
Have you got a wrap up?
No,
Well,
I think
let me put it to the audience. You can take questions.
Yes.
Yes. So are there any questions on these two topics, nebis in idem and legal certainty?
But,
Jared?
well, perhaps I should.
No, please. Teresa's working.
Well, but of course, if you talk about legal certainty, the other big issue is, of course, that I think all states apply also a general anti-abuse concept, a written or an unwritten and general anti-abuse concept, like abuse of law, that is applied by courts on a case-by-case basis. So, in any individual case, a tax administration can say, this is an abuse of construction, this is abuse of tax law, see you in court, and then the tax court has to decide in an individual case whether that is an abusive practice. And of course, well, how can you... There's also a controversy between legal certainty and the general notion of abuse of law, because, well, tax advisors always tend to say, well, that violates legal certainty, because, well...
It covers everything.
Yeah, it covers everything, and we just have to see what happens in court. But of course, all courts, and also the European Court of Justice, apply this general anti-abuse concept.
Again, in this 2012 paper that I wrote on the thin cap case, I looked at this area in great detail, and I found the answers in the court's case law on this. Member states can only protect against wholly artificial arrangements designed to circumvent the national tax system. And we see this in the CFC area, where you must be given the opportunity to show that what your CFC is doing, say, in the Cadbury Schweppes area, the company in Ireland, is a real entity. In other words, it's not just a letterbox company. So if you're carrying on genuine economic activities, you defeat the anti-abuse rule, which is the CFC rules. You defeat them. In the thin cap and in the transfer pricing area, we have two cases. Well, we now have three because we have Italcar as well. We have the thin cap group litigation case, and we have the SGI case. Now, when you look at those two judgments, you will see that the court accepts that an arm's length test is an objective test to determine whether or not what the taxpayer is doing is or is not a wholly artificial arrangement. But in the proportionality analysis of thin cap, in paragraphs 82 and 83, and in the proportionality analysis in transfer pricing in SGI around paragraph 71 and 72, the court says exactly the same thing in both of those areas. The taxpayer must be given the opportunity to rebut that presumption that what he is doing is not a wholly artificial arrangement. So in other words, if the taxpayer does not meet the arm's length principle with the transaction, he must still be given an opportunity to show commercial justification. Now, in the UK Court of Appeal, the UK Court of Appeal said that test does not exist, that test has already been carried out in the transfer pricing analysis by the tax authority. You've already been given that chance. But the court says the same thing in Italcar, the same thing in SEAT, and the same thing in every single case since the thin cap case and SGI. So I would say that if the court were to look at the matter again, the clear law in this area is that the taxpayer must be given an opportunity to rebut the presumption. And this is very significant because it's not the European court that will be doing this. It'll be the national court. It'll be you as judges in the national courts that will be reading these cases and applying them. Does Katerina deserve a clap before lunch?